Today I'm going to discuss with you two topics, that is debt recovery special laws, and also then thereafter there's another topic that I want to discuss with you, nomination, dormant accounts, nomination, and last will. So with these two presentations lessons today, so I will finish my part of lecturing for you. So thereafter, from next week onwards, Mr. Rangaliyanage, the other lecturer, will continue with you. So he will cover basically the other topics, including negotiable instruments and checks. So thereafter, if time permits, the institution will have a revision class. I'm not sure whether it's they have already fixed it, but normally we'll have a revision class. But for the time being, remember today is my last lecture with you. So we'll start today. What we are going to discuss today is the debt recovery special laws. If you remember the previous week lesson that we'll discuss, we discussed about the normal regular procedure, money recovery action, and hypothetical action, that is mortgage bond action. If you have a mortgage property, whether immovable or movable, what is the procedure that we can follow to recover by selling the mortgage property by fiscal auction through courts. Now, today we are going to start from there. Today we are going to discuss two special debt recovery laws. This is very important. This every year that you see, there's a question, at least one question, essay type question, 20 marks full question from this area, debt recovery laws. Security and debt recovery, sometimes they collate and give one question. However, this is again a very important topic. Debt recovery special laws. Under this debt recovery special laws, in our subject, we have to study two special laws. It's very easy to remember. You remember both these laws introduced to the country in 1990. So easy to remember the numbers of these two acts, that is number 2 of 1990 and number 4 of 1990. So those are the two special laws that we are going to study under debt recovery special laws. That is, those are number 2 of 1990 and number 4 of 1990. First, we'll take number 2 of 1990. The act, you have to remember the name of the act and also the number of the act. Act number 2 of 1990, the name of the act is Debt Recovery within bracket Special Provisions Act. Special Debt Recovery Special Provisions Act number 2 of 1990. So what is this act? What is the speciality of this act? Why we say it is a Special Provision Act? This, remember, in 1990, in that century, well, rather that decade, there was a discussion with regard to the debt recoveries, because in the financial industry, in the financial sector, in the banking sector, everyone observed that the regular debt recovery process, that is through courts, is very delayed and it is not efficient. It is not speedy in order to recover the debts. So therefore, there was a discussion, there was a idea to introduce a new law, which is speedy law to recover debts. That was needed at that time. Even today, this, you know, that we are in the banking business. As I told you last week, debt recovery plays a big role in the banking business. As we said, we can't survive in the banking business unless we have a good debt recovery mechanism. So, what is the purpose of this act? The act says to provide speedy procedure to recover debt through courts. The act, in the preamble of the act, it says to provide a speedy procedure to recover debts through courts. I have highlighted the word through courts. Through courts means that we have to go through the court procedure, but this is a speedy procedure compared to the other procedure that we discussed last week. We discussed the regular procedure, money recovery procedure last week. I said under that regular procedure, by filing an action and getting a final result in a regular action, it takes about 4 to 5 years, or sometimes 3 to 4 years, or sometimes more than that, to get a final result. So that actually, when you see that, that is a very slow process. So therefore, there was a need for a speedy procedure. So this act established to cater to that requirement. So speedy procedure was introduced, but again through courts. We have to file action, and the speciality of this act is that we can get the final result comparatively in a shorter period compared to the regular procedure. So remember, that is important when you compare this number at number 2 of 1990 with 4 of 1990. 2 of 1990 is a process or procedure through courts. 4 of 1990, that is Parate process, it's not a court procedure. This is one difference between these two. Right? There are so many differences that we will discuss later. You have to compare after studying both. So for the time being, remember, this is a court procedure, and we have to get the result through court process. And this act is applicable to all lending institutions mentioned in the act. So when we say the lending institution, it is not only to the banks. This is another important difference between number 2 of 1990 and 4 of 1990. 2 of 1990, this act, it's applies to the lending institutions. But 4 of 1990, which we are going to discuss later, is applicable only to the banks. That's another difference between 2 of 1990 and 4 of 1990. This, again, I'm saying it's applied to the lending institution, including banks. So the banks or the lending institution, word lending institution has been interpreted in this act. So the lending institution means, as per the act, commercial banks, SMIB, NDB, NSB, DFCC, and registered finance company. So all these are covered by this act. Basically, all these institutions can file action under debt recovery law in court of law. Then what is the procedure applied? As I told you, it's a court procedure. Then I said in the court there are two procedures. That is the regular procedure, and there is another procedure called summary procedure. Last week we discussed a money recovery action under regular procedure. You may remember that plaintiff, the bank, we'll take example, the bank in case of default of the loan, go to courts, file plaint, and summons issue. Defendant comes on the summons returnable date, file answer, then parties then go for a trial, give evidence, mark documents, then thereafter written submission, oral submission, then judge give the judgment, then execute the decree. That means that the plaintiff or the fiscal officer sees the goods of the defendant, that is the the borrower and auction those goods in a public auction, and from the money received from the auction, that money will pay to the plaintiff, that is the bank. So that is a procedure under regular action. Here, the procedure applied in 2 of 1990, it's summary procedure. Summary in Sinhala we call Lagu. Lagu or summary. Summary means it's a shorter version of a regular procedure. It's a very shorter version. You know, if you take a book, a novel may have or even okay, we take a novel. We say novel, it has 1,500 pages, but if you see the summary will have only 2 pages. So what you do is you summarize the entire story into a very shorter version. Same thing has happened here. So the regular procedure, you follow all the steps and get the final result. After 4 years, you get the final result. But here the difference is, again it is a court procedure, but you have summarized it, the process summarized, and within I would say within a year or less than a year, you can get the final result, the same result that you get in a regular action, that is recovery of money, within a shorter period. That is why we call this as a summary procedure. So when you say the summary procedure, remember, you don't want to follow all the steps of the regular procedure. If you have to follow all the steps of the regular procedure, then it is not a summary procedure. Like a summary in a novel or book. So if you read the summary, so all the things that you have mentioned in the article, it is not in the summary. So only the important points are there. Likewise, here in the debt recovery procedure, the most important steps are there to follow, not all the steps. That's how we have summarized the process. Then remember, this is another important point that you have to remember. So this act was amended, and as per the amendment, there is a limitations now. That is, unless the claim or the total dues to the bank or the institution, if it is less than 150,000 rupees, not 150,000. Not 115 million, no, 1.5 million, no, not like that. 150,000, right? If it is less than 150,000, the total claim, that is the capital outstanding and the interest outstanding and everything, if it is less than 150,000, we can't go summary procedure under debt recovery action. So that means that the claim has to be over 150,000. If it is less than 150,000, that you know that it has to go for the go through regular procedure after referring to the mediation board. So that you have to remember, that is a restriction or limitation in 2 of 1990. Then the facility must be granted on an instrument or written agreement. This is another important thing to the condition that you have to fulfill if you are to file action under debt recovery. It has to be the loan or the whatever facility that you have granted has to be based on an instrument or a written agreement. Instrument means check, promissory note, any negotiable instrument. Right? Sometimes we lend money, especially the financial institution, the finance companies. They lend money based on keeping a promissory note as a collateral. That's it. Or sometimes there are some institutions, they lend money just keeping a post-dated check as a collateral. So that is sufficient, that instrument is sufficient to file action under debt recovery law. So what are the other facilities that we grant on a written agreement? So we grant term loans, short-term, medium-term, long-term loans, uh, and there are other facilities also, like permanent overdraft, check discounting facilities. Likewise, there are a number of facilities that we grant to our lender, to our the customers based on written agreement. So if there is a clear agreement, written agreement, then we can go under debt recovery law. But if there is no written agreement, in a situation like that, we can't file action under debt recovery law. So example, casual overdraft. So bankers, the people who work in the banks, you know that casual overdraft means when a check comes to the account without sufficient funds in the account, sometimes the banks pay by overdrawing the customer's account. So the bank manager or the area manager has given a limit. We call it DA, right? Delegated authority. They have a limit that they can approve. So within that limit, they can take a decision and pay the customer by overdraw the customer's check by overdrawing the account without any written agreement. So that is called a casual overdraft. The casual overdraft can we file action under debt recovery law? We basically, you can see, we can't file action under debt recovery law 2 of 1990. Summary procedure action we can't file because there is no written agreement. So the conditions to fulfill are: number one, the amount due to the bank or the institution has to be 150,000 or above. Number two, there has to be a written agreement, or there has to be an instrument that those conditions should be fulfilled to file action. If you have any questions from here, they can ask up to now. Before I go to the procedure, if you need any clarification. Right, so then I'll go to the procedure. So this is the procedure under 2 of 1990. The procedure is this. Remember, it's a summary procedure under this. Before that, I will just show you the regular procedure. Then you will remember the steps that we have to follow. This is the regular procedure. First, we send the letter of demand, then we file legal action, serve summons, file answer, then a list of witnesses, pre-trial, trial, written submission, judgment, then the execution of decree, fiscal auction, and recovery, the debt and the cost. So there are 12 main steps that you can see. Now we'll see what is the procedure under 2 of 1990. You see, there again it is a debt recovery law. Also, debt recovery action is court action. So therefore, we have to file a legal action. So before we filing legal action, as you are aware, we have to send a letter of demand. That is the number one step of any legal action. First, we have to demand. So we send a letter of demand. After that, if customer doesn't pay within the 14 days of the demand, we then can file action. So we file legal action in court of law. So what are the documents that we have to file under debt recovery law? First, the document that we have to file is the plain. Together with the plain, that we have to file another set of documents. That this is the difference between the regular procedure and the summary procedure. Together with the plain, we have to file an affidavit given by a principal officer of the institution or the bank. So these things that you may note down, right? Plain plus an affidavit from a principal officer of the bank or the institution, right? So then the instrument or the agreement that we have to file. Remember that we have to file with the plain the original instrument or the original agreement. That is a requirement. When we say that we have to file the original agreement, that original agreement has to be a very clear agreement signed by the parties without any alteration or any uh, I would say any alteration or any without leaving any blank spaces, right? So that basically a complete agreement must be there. So together with that, we have to file written evidence also. To read written evidence means that we have to provide evidence to support our claim. So for example, we say now that we say in the plain, we have granted a loan of 5 million. The customer entered into a written agreement that we annex to the plain, and we say as per the agreement, he agreed to pay 10% interest per annum. Then he has to pay 20 or rather 60 installment, 20,000 each. A monthly installment, but he paid only 10 installment. Then he defaulted. Then thereafter, this much is due to the bank. So basically, this is the basis of the claim. So just saying those things in the plaintiff is not sufficient. So we have to provide whatever the evidence available with us to prove the claim that we have made in our claim. So therefore, we have to annex the account statements and other relevant documents to prove our case. Right? So those are the documents that we have to annex together with the plaint. What are the documents? Plaint, an affidavit from the principal officer of the bank or the institution. Then we have to annex the original agreement or the instrument. Then whatever the written evidence that we that available with us to prove our claim. So that those are the documents we file at the initial stage. Then after filing this action in court, then court will give a date to support the case. You now see the next step of the regular action. After filing the action, the court will issue summons to the defendant. But when it comes to debt recovery process, there's no summons. Straight away, the court will give a date to support our case. So normally, after filing the case, we normally get a date within 2 weeks, maximum within one month, we get a date to support the case. So then on that date, our lawyer has to go to courts and support the claim or support the plaint in open courts. Well, supporting the case means that he has to convince the judge based on the plaint, affidavit, instrument, written agreement, and the evidence that we have annexed together with the plaint, that we have to convince the judge that the amount that we have mentioned in our plaint is legally due to us, to the bank or the institution, right? So basically you have to satisfy the judge that he can basically give a judgment in favor of the bank. It seems to be very easy, but it is not so, because whatever the documents that you available, you have to provide, and judge will examine those documents and he has to be satisfied before he make any order. So therefore, it's the duty of the bank to provide all necessary documents to support the claim. Then after supporting the plaint or the case on the given date, if judge is satisfied that the claim that we have made in our plaint is legally due to the bank, then the judge will issue a temporary judgment. Remember, a temporary judgment, not a final judgment, it's a temporary judgment. Temporary judgment, there's a special name for that temporary judgment. It is called NISI, N-I-S-I. It is called order NISI. Order NISI means it's a temporary judgment in favor of the bank. So then, after that, after issuing the temporary judgment order NISI or decree NISI, that will be served to the defendant, that is the borrower or the guarantor, that we serve that decree. You see, there's no summons. Straight away that the customer will be served a temporary judgment. So in that judgment, it says that this case has been decided against you. You have to pay this much to this bank, and if you have any reason to challenge this judgment, that you have to show cause on the next day. They will be given a date. That is the notice that he will get. So basically, when the decree NISI is served to the defendant can't just come and file answer in the case, in summary procedure case, like in this process. This is a regular procedure. Uses after serving the summons, customer has a right to come and file answer. But here in the summary procedure, it's not like that. He has no right to come and file answer. He has to come and get permission from the courts. That is number 5. The defendant has to come to courts and file papers and has to get permission from the courts. So to get permission, he has to show courts, satisfy the courts that he has a ground to challenge the judgment. Right? So therefore, he has to provide whatever the necessary documents, whatever the evidence that he has with his papers, he has to file and ask permission from courts. So basically, commonly the grounds that the customers challenge the judgment decree NISI is they are basically challenge the dues, the account statements. Sometimes we may have asked penal interest. We have not correctly accounted the payments that he has made. Those are the things basically they put in their papers when they seek permission from courts. So therefore, it is very important to us to have all the accounts in very clear manner. So otherwise, if customer can dispute the accounts, then the court may grant him permission. So after filing these documents, that seeking permission from courts, for that they will file papers, then the procedure thereafter, there are two branches there, right? You see, two things can happen. So after filing the papers, then the court, after inquiry, will give either the court can grant permission or court can refuse the permission, right? Grant permission and refuse the permission. Here that in this note, there's a error. This two has to be changed. From the left side, I have mentioned as grant permission. It has to be refuse permission. Then the other side, grant permission. Left and right, that you have to change, right? So we'll say first we say court is not satisfied with the defense or the grounds that the defendant has asked for permission. So court refused to give permission. Refused to give permission means the customer cannot file any answer. So he can't challenge the judgment. So that the court said you have no ground to challenge. Whatever you said in your papers is baseless basically. So therefore, you can't challenge, you can't file any papers to challenge the temporary judgment. So then what happened? So then, if permission is not given, straight away the judgment given before a temporary judgment, that is decree nisi, will be made absolute or permanent. Straight away, the temporary judgment, decree nisi, will be turned or will be converted into a permanent judgment. This is called decree nisi made absolute, making the decree nisi absolute. So absolute decree nisi means final judgment, final judgment. So that is what happens if customer does not get permission. Then we see the other branch, that is, if court thinks that customer has put a strong ground to challenge the decree, so therefore court grant permission. So in that, in other words, court give the customer an opportunity to challenge the temporary judgment. So then what happened? The customer can file papers and customer can ask for an inquiry. It is not a trial, right? It's an inquiry. So at the inquiry, customer can give evidence, and also he can mark paper documents, evidence. He can mark to support his defense. So also the plaintiff, that is the bank or the institution, also can give evidence at this inquiry stage. So when we say inquiry is not like a trial. A trial is a lengthy process where you can bring whatever the number of witnesses, documents, but inquiry is not like that. It's very limited number of witnesses that we can bring to courts with the permission of the court, and also you have to finish it within a shorter period of time. So after the inquiry, two things can happen. So if judge feels after hearing all the evidence and everything, judge, if he sees that the defendant's or the customer's evidence is correct and the plaintiff, the bank, is wrong, so then the judge can dismiss the case of the bank. So that means the bank cannot recover anything, or judge can adjust the judgment. The temporary judgment he can adjust. For example, we say in the temporary judgment, in the plain, bank has asked 10 million now, 10 million from the defendant, and the judge at the initial stage in the temporary judgment in the decree nisi, he has allowed 10 million to recover from the defendant. The defendant comes and contested in the case, and he showed that it is not 10 million, it is only 5 million due to the bank. So then what happened? So the judge can adjust the judgment, decree nisi he can adjust, and he can give a relief 5 million to recover from the customer. So two things can happen. So either the case can get dismissed from the beginning, so no money can be recovered, or judge can alter the judgment, decree nisi, the temporary judgment, and give a final judgment. Or he can make absolute the decree nisi. So that means that after considering all these things, judge thinks the defendant's argument is not correct. So therefore, he can make the old decree nisi absolute. So that means 10 million will be the final judgment. So likewise, ultimately, this relief judge can give. So after converting the decree nisi into an absolute state, or as a final judgment. So thereafter, the same procedure that we have to follow in this also, like summary procedure. So execution of decree, that means uh, uh, the fiscal officer can go and seize the properties of the borrower and also properties of the customer and the guarantors, and auction the property and recover the money and settle the dues of the bank. So this is the procedure of uh, summary procedure under section under the provisions of Act number 2 of 1990, that is Debt Recovery Special Provisions Act. So any questions from Debt Recovery Special Provisions Act and its procedure, you can ask now. Do you have any questions? Okay, if you don't have any questions, then we'll go to the next one. Then we are going to discuss the parate procedure. This is the Act is number 4 of 1990. The name of the Act is Debt Recovery, Recovery of Loans by Banks Special Provisions Act number 4 of 1990. When you read the name of this Act, you can see it is applicable only to the banks. The word bank is there. Recovery of loans by banks. So therefore, this is not applicable to the financial institutions other than the banks. So it's only applicable to the banks. That's another difference between 2 of 1990 and 4 of 1990. And you see, the purpose of the Act is an Act provide for recovery of loans granted by banks. The purpose also saying this is an Act to provide a procedure to recover loans granted by banks. And the procedure is not a court procedure. This is important. It is not a court procedure. It is a procedure where you don't want to involve with court. So the banks by themselves can auction the mortgage property under the parate process. That is the difference between these two. We'll see the procedure, right? There again, if the loan is defaulted, we send a letter of demand. That is number 1. Okay. Then, after sending the letter of demand, if customer does not pay, then the next step is we pass a resolution. Now remember this process. The banks, we apply this process to recover a loan where the loan has been secured by a land, a property mortgage rather, land or movable or immobile property mortgage. That is, by auctioning the mortgage property, we are going to recover the loan. That is the process. That is the idea behind this. So therefore, we send a letter of demand. Then after sending the letter of demand, if customer does not pay, then the director board of the bank can pass a resolution to auction the property. By passing the resolution, the director board of the bank will appoint an auctioneer or appoint a manager. Now here, I said that the idea is to recover the loan by selling the property, mortgage property. But actually, this section says that the bank can pass a resolution either to appoint an auctioneer or to appoint a manager. Now, uh, I have a question here. So, bankers, please can you explain me, anyone, what is the meaning of, or what is the reason that this section says that we can appoint a manager? So how do you recover the loan outstanding by appointing appointing a manager? Of course, by appointing an auctioneer, you know the auctioneer is there to sell the property. Why manager? What is the role of a manager? Can someone answer to that question? Anyone? Anyone has experienced this? Any banker?
They can use the property.
What do you mean by use that property? Can you give me an example?
In case I think
So,
the mortgage property is a government factory,
yes,
so he has to manage that. All of a sudden, he can't sell the property, so that's
yes,
why they are appointing a manager for that.
yes, very good. Thank you very much. Yes, it depends on the mortgage property, right? So, if it is a property where you can sell easily, so you have to decide when you are passing a resolution. First of all, you have to think about the property mortgage to the bank, right? We say now it's a property 10 purchase of 20 purchase land, residential property, mortgage to the bank and defaulted. So what is the procedure that we are going to adapt? So we either can appoint an auctioneer or we can appoint a manager. So you see, there's no point of appointing a manager to manage this 20 purchase. There you can't generate any income. It's a residential property. You can lease it out, but you can't. It is not sufficient to recover your loan. You know. So in a situation like that, the best thing is to appoint an auctioneer to auction the property. You sell the property. You sell the property and you take the money and you recover your loan and interest and charges and everything. So we say there is a property that which is mortgaged to the bank. It is as this gentleman said, it's a garment factory, or it could be a tea factory with tea estate, right? We take the example garment factory, right? So garment factory is mortgaged to the bank. So if we appoint an auctioneer to auction this property, the garment factory, we might not be able to find a buyer for this property easily, because you know at the in a auction no one will buy a garment factory, because before you purchase a garment factory or any business, the buyer wants to evaluate or has to investigate and see what are the liabilities and what are the assets available with this company or the business. So then thereafter only he will decide the price. So no one basically will bid at the auction to purchase a factory like that. So therefore, and there can be a situation like this also. We say now the garment factory is worth 300 million rupees, just an example, and only dues to the bank 50 million. So in a situation like that, so if you go to auction this garment factory, so definitely that the customer will go to courts and get an enjoining order against the bank, because it's not just to auction the property which is worth 300 million to recover only 50 million. So instead of that, in a situation like that, after considering these things, the bank can appoint a manager to manage the property instead of auctioning the property. So you can appoint your person to manage the property, so that person can go to can take the possession of the business, he can take the control of the business, and he can run the business, and he can take the money or the generated income and settle the bank loan, and after settling the bank loan, that we can give the control of the property back to the customer. That is the idea of appointing a manager. So, so that is that. Then we'll see the process, other procedure, that is appointing an auctioneer. That is to auction the property or sell the property. Then, after passing the resolution by the directors of the bank, we have to publish a notice which is called notice of resolution. So notice of resolution shall be published in the Gazette and at least 3 daily newspapers, that is in 3 languages, that is Sinhala, Tamil and English, we have to publish. So remember, the Gazette and newspaper publication must be done. So we have to publish the resolution. A notice of resolution we have to publish. So up to step number 3, 1, 2, 3, the bank has to do. So then thereafter, we inform the auctioneer that he has been appointed as the auctioneer to auction this property. So, sorry, before that, the copies of the notice of resolution that we publish in the Government Gazette and the newspapers, we have to send to the borrower, dispatch to the borrower. So up to step number 4, the bank officers we have to do. We send the letter of demand, pass the resolution, publish the resolution in the Government Gazette and also newspapers, then send a copy of the published articles, that is Government Gazette and also the newspaper articles together with the covering letter, we have to send to the borrower. So that we have to do up to 4, number 4, step 4. So then thereafter, the 5th step is the notice of sale. So the auctioneer, remember, the auctioneer has to prepare the notice of sale. So notice of sale means the notice of the auction. So we have to give notice to the public that we are going to have an auction. So auctioneer has to give this notice. So what are the things that we have to, or the auctioneer has to include into the notice of sale? The date of the auction, time of the auction, the place of the auction. These things must be there. So in the notice of sale, the date, time and the place of the sale shall be published in the Gazette, and copies of the such notice shall be dispatched to the borrower, posted on or near the property to be sold within 14 days of the auction. This is very important. This is a mandatory provision in the Act. Mandatory provision means if you don't do this, the process is invalid. Process is not valid. So therefore, it is very important, if you appoint an auctioneer, this is the auctioneer, this is one of the auctioneer's duties that you have to follow and see whether the auctioneer has published the notice of sale before 14 days of the auction. So this is important. Not only that, he has to publish in the Government Gazette, he has to publish that in the newspapers in 3 languages, and he has to dispatch the notice to the borrower, and also he has to paste or paste the notice and posters near and on the property. All these things that he has to do 14 days before the auction. Right. So then thereafter, after doing all these things, then step number seven is fixing of upset price. Fixing of upset price. This is again, a step has to be done by the bank officers. Upset price means you are aware that at the auction start with a minimum bid. So thereafter, the bidders, they can put their bidders, but there is a minimum bid that the auctioneer start the auction. So therefore, the bank, as per the provisions of Act number 4 of 1990, director board of the bank has to decide the upset price. Upset price, it has to be decided by the bank. So how do we decide the upset price? So upset price, when we are basically, even though we say the director board decide that, practically what happened, this upset price memo or the board paper will be prepared by either by the legal department or the recoveries department. Right? It depends on the internal process in procedures. Some banks, the legal department prepares. In other banks, some other banks, the recoveries department prepares. So, however, the bank officers, they prepare the upset price. Then they put the board paper to the board, and the board will approve that. Right? So, what is the procedure, or what are the things that we have to consider when we are fixing an upset price? These things that we have to consider. Number one, the loan amount, dues, total dues on the loan. That is the amount that we have to recover. So we have to consider that. Then number two, the market value of the property. Number three, the for sale value of the property. To consider the market value and the for sale value, remember we have to obtain a valuation report. We have to obtain a valuation report. So from there you can get the market value and the for sale value. So idea behind this is we have to get the maximum amount from the auction. So therefore, after considering these things, and also there's another one that we have to consider, that is the cost of the parate process. That is also we have to recover. So these things we have to recover. What are the things? Okay. Outstanding of the loan, market value of the property, for sale value of the property, and the cost of the process, parate process. So you have to add the cost of parate process to the outstanding. So then you get the total dues to the bank. So then consider the total dues, market value, and the for sale value. Ultimately, that the idea of this process, it is correct to say that we have to recover the loan and the outstanding, but again, there is an obligation on the bank to get the maximum price for the land. So therefore, when you are fixing the upset price, it is always better to fix the price for the market value. It is safe, right? So it is not a rule, right? It's not a rule. It is not a must. It is not compulsory as per the provisions of Act number 4 of 1990. However, otherwise, if you put for example, we say the market value of the property, we say 10 million, for sale value is 7 million, and the total dues to the bank is only 5.5 million. So after considering all these things, if you fix the upset price for 5.5 million, so that means that you are going to auction a property which is worth 10 million market value for a rupee 5.5 million. So it's a huge loss to the owner of the property, borrower. So the borrower can challenge that in court of law. So if court sees this, there is a high possibility the court can cancel the auction. So therefore, always try to get the maximum price for the land and recover whatever the dues to the bank, and we have to give the balance to the borrower that is there. So therefore, remember, fix the upset price based on that principle. Then after fixing the upset price, that we have to inform the auctioneer the upset price. Then the auctioneer will carry out the auction on the auction date. So he will start the auction. The minimum bid price will be the upset price that we decide, that we have been passed by the board of directors. So then at the auction, the bidders can bid. If there are no successful bidders, the bank can bid for a nominal price. We don't want to bid for the total or the market price. We can, the Act provide provisions for that. The bank can bid for a nominal price. Normally, if bank bid only 1,000 rupees, or some banks 10,000 or whatever, it's a nominal figure, not the market value. So at the auction, we say there is a successful bidder. So there is a buyer, right? So if there is a buyer, then what happened after the auction? The successful bidder or the buyer and the auctioneer will sign a document called condition of sale. So what is this condition of sale? Condition of sale is a notarially executed document. It's an agreement to sell basically between auctioneer and the borrower, right? So as we know that when we go to auction, we don't bring or we don't take all the money that they are. So we only pay an advance at the auction. Then thereafter we get time. The buyer get times to pay the balance. So all these conditions mentioned in this condition of sale or agreement to sale. So which is called condition of sale. So condition of sale, they have to register in the land registry. After that, then the buyer has to pay the balance money as per the condition of sale, as per the terms of the condition of sale. So if buyer pays the total amount to the bank as per the sales agreement, then the bank will issue him a title deed. There's a special name for that. It is called certificate of sale. This will be issued by the director board of the bank. It is again a deed attested by a lawyer. So that will be registered in the land registry. So once the certificate of sale is registered, the ownership of the property will be transferred to the new buyer. So then how do we recover the loan? So from the proceeds that we receive from the buyer, that we can recover our loans, interest, charges and everything. Then after recovering all these things, if there is excess money, then that money we have to return to the borrower. Return to the borrower. So we say that is if there is a buyer. If there is no buyer, then what happened? If there is no buyer, then the bank will acquire the property by putting a nominal fee, and the condition of sale will be signed between the auctioneer and the bank. Then thereafter, a certificate of sale will be issued by the director board of the bank, acquiring the property in the name of the bank. But remember, when we say a property is acquired by the bank, the ownership, actual ownership will not transfer to the bank, because we can't acquire the ownership, or we can't acquire the properties under, the bank cannot acquire the properties and keep that property forever under this act. Remember, act says recovery of loans by banks special provisions act. It is to recover the loan, it is not to acquire properties. So therefore, remember, the bank cannot get the ownership of the property under priority. we get the property and the ownership of the property temporary only by issuing the certificate of sale. So then thereafter there are provisions that we have to follow. So if we acquire the property within a reasonable time, we have to find a buyer and resell the property. So if we find a buyer, then we issue a certificate of sale. The buyer will pay the money of the value of the property. Again, we have to sell the property to the market value. If it is not, if we can't find a buyer for the market price, then we can sell to the highest price that we get from the buyers. But again, better to get permission from the central bank before we sell the property below the market price. So after selling the property, from the money we receive from the transaction, that we can recover the loan, interest, charges, and everything. And if there is excess money, then we have to return that money to the borrower. That is the parate process. If you have any questions before I go into the other part, if you have any questions with regard to the parate process, you can ask now.
Can you explain the upsell price again?
Upsell price, okay, right. So you want to know how we prepare the upsell price, right?
Yeah.
Right, okay, right. Thank you. Right. I will explain again. Upset price. Upset price, that means that we have to decide what is the minimum bid that we are going to give to the auctioneer. So how do we prepare the upset price? Again, what are the things that we have to consider? We have to consider the loan outstanding, whatever the dues to the bank as at that day. Number one. Then there is a cost of the auction. Normally, to do the auction in today's, it takes about 200,000 or close to 200,000. So that also that we have to consider. Then you add the cost of the parate or the parate auction to the total outstanding and the interest of the loan. So basically you add both these two, and that is the total dues to the bank. So number one, we have to consider total dues to the bank. Number two, we then have to obtain a valuation report, and we have to consider the market value of the property. Number two. Number three, we have to consider the for sale value. These are the three things that we have to consider. The total dues to the bank, market value, and the for sale value. Then we have to decide what is the minimum bid that we are going, or what is the upset price that we are going to put. We can put either the total dues, we can put either the market value, or we can put the for sale value. There's no restriction on that, right? However, it is always safe if you put the market value, because the market value means the practically that is the maximum that you can get for the property, right? Sometimes there can be a situation like this. The total dues of the loan is higher than the market value, right? In a situation like that, you can put even the total dues, but remember that you will not be able to sell the property higher than the market value. So therefore, it's always good if you can put the upset price for the market value. But also, there is a possibility that you can put the upset price or keep the upset price at for sale value. For sale value means if you sell the property in a hurry, that is the maximum that you can get. So for sale value also can be considered as the upset price. They can put there. So remember these things, three that you can consider. There is no strict rule there. Either the market value, either the for sale value, or either the dues that you can consider. But remember, if the total dues of the to the bank, if it is very low, it is very dangerous. You put the upset price at dues. So for example, if the total dues 5 million and the market value of the property 10 million and the for sale value is 7 million, and if you put the upset price at 5 million, that is the total due to the bank, that can be challenged in court of law. So that's things that you have to consider when you are fixing the upset price. So upset price has to be passed by the board of directors. The bank officers have to prepare the board paper and put to the board and get the approval for the board paper, and then you have to inform the auctioneer the price. So that is how we prepare the upset price. Is that enough, that explanation?
Yeah, thank you.
Okay, any other questions from this?
Yeah, thank you.
Okay, right, any other questions from the Faraday process?
So what does the notice of resolution include?
Notice of resolution. Okay,
Yes.
right. So notice of resolution, basically after we passing the resolution, director board, we appoint an auctioneer. So in that resolution, we say that this property has been mortgaged to the bank by so and so, and he has defaulted the loan. This much is due, and Mr. So and so has been appointed as the auctioneer to auction the property to recover this money. So these are the information that we include to the resolution. So after passing the resolution, we prepare a notice of resolution. The notice of resolution also carry that information. Basically, it is the same information that we have included into the resolution that we put into in the notice of resolution. So basically, if you get a paper, if you get a daily newspapers, you may see, you can easily see the notices published by the banks, right? My advice, just take papers, daily newspapers, and see the resolution notices of resolution published by the banks. So then you can have an idea. So basically, in the notice of resolution, so what we put is the name of the borrower, name of the bank, name of the borrower, amount due to the bank, then the description of the property, and the name of the auctioneer. Those are the things that we include in the notice of resolution. Right.
Yes.
Yes.
Now, the notice of resolution, basically it's published on the newspapers, no? So the borrower's name and the amount due to the bank, everything is mentioned. So will
Yes.
it affect to the duty of secrecy thing?
No. Right. So you see, the good question, right? Anyway, good question. You see, the duty under the duty of secrecy, there are situations that we can divulge certain information. One thing is if it is required by law, right? So now Act number 4 of 1990 says that we have to publish a notice of resolution. That is a statutory requirement that is required by law. So if law requires us to publish this information in the papers and also in the gazette, and we have to give notice to the public, so that is covered under duty of secrecy. So therefore, you can't blame that you have breached the duty of secrecy. Your customer can't file action against the bank saying that duty of secrecy is breached. But remember, when you are publishing the notice of resolution or notice of sale, you have to publish the necessary information. If you publish unnecessary information, for example, you are recovering a loan. We say it's a housing loan defaulted, and this customer has a credit card and a personal loan also. So you are supposed to publish the total dues of the housing loan. You can't publish the dues of the credit card and the personal loans also. So if you publish those things, that is a breach of contract. Otherwise, this is a statutory requirement. So therefore, it is covered by law. Any other questions? Okay, so then I'll go to the next. Yes. Yes.
So the minimum amount to go to karate is 5 million, right? So
That's I'm going to discuss next. So I'm limitations and other things that I'm going to discuss next. So we have to wait a little while.
so this can you explain again what's condition of sale, sir?
Okay, condition of sale is you, as I told you before. When you go to auction, say think you are the buyer, you want to buy a land and you go to auction. When you go to auction, you don't take the money, all the money you don't take. You say that the property is worth 20 million, right? So when you go to auction, you don't take 20 million in your pocket. So if it is so, then every bidder has to bring 20 million there or more than that. So basically, it won't happen. So we go there as a bidders and we don't take money. We only take the money sufficient to pay the advance. So we say now we bid and we won the bid, and I am the successful bidder. So then at the auction, we have to come into an agreement because I don't pay the money, the total consideration at the site. So I only pay 20 we say 25,000, just an example, as an advance, and I say within 1 month's time that I will pay the rest money, right? So for that, I have to enter into a contract or agreement. So that agreement is I sign with the auctioneer. Auctioneer is the person who auctioned the property. Right, so therefore I pay advance to him 25,000 and I reserve the property and I agree to pay the balance money within 1 month or 3 months or whatever. So those conditions that we put into the condition of sale. Condition of sale. So it's like that you go to forget about this auction. You want to purchase a land. You go and see the property and you pay an advance to the owner, and at that time that you have to sign an agreement to sell. That is a must when you are purchasing a land. So that agreement to sell has to be executed by a notary or lawyer, and it has to be registered in land registry also. Same apply here. So auctioneer auction the property and we pay an advance and we sign a document that is called condition of sale. It is basically it's an agreement to sell. So that again has to be executed by a lawyer or a notary and has to be registered in the land registry. So after that, the buyer has to pay the balance amount as agreed in the sales agreement. That is the condition of sale. So I think
So thank you so much.
right. Right. Okay. So then we'll go to the next one. What are the limitations that we have in or restrictions in Parate? In the first this thing that you have to remember, in the initial act number 4 of 1990, there was no limitation. There was no limitation. So whatever the amount, right, due to the bank, if the loan is secured by a property mortgage, bank could pass a resolution and auction the mortgage property. However, in 2011, this Act 4 of 1990 was amended. 4 of 1990 original act, it was amended in 2011. So 2011, it was amended twice, remember, right? Easy to remember, both amendments came in the year 2011. So what are the amendments? Amendment number 1 of 2011 and Amendment number 19 of 2011. So what happened in this? By this amendment, the government or the statute or the legislature put a condition or restriction on parati. What is the restriction? As per this, it says no action shall be initiated to recover of any loan in respect of which the default is made where the amount of such loan is less than rupees 5 million. So that is the restriction or the limitation imposed by the government. So basically, as per this amendment, after the amendment, if the granted loan amount is below 5 million, even though that loan is secured by a mortgage property, we can't go parate. We can't go parate. So that is the law. That was the law, right? What happened? So then there was another question. When we say the loan amount has to be over 5 million, there was a unclear. It was unclear to the banks, and there was a gray area because it's not clear whether the granted loan amount or whether it's the outstanding amount 5 million has to be 5 million. So then it was cleared by amendment number 19 of 2011. As per the 19 of 2011, it says granted loan amount has to be over 5 million. So basically, as per this amendment, the law is if the loan has been granted by a bank and if the loan has been secured by a mortgage, property mortgage, and the granted loan amount is 5 million, then we can go parate. Right? If it is not, then we have to go and file mortgage bond action. So that was the law up to 2017. Then what is the present situation? This is very important. In 2017, the Supreme Court of Sri Lanka gave a judgment in a case. The case that you have to remember, Sumudu Sanjeevani Nanayakara and others, Sumudu Sanjeevani Nanayakara versus HNB and others. So in this case, what happened? This law was again reviewed. And the judgment, as per this judgment, now it is not the granted loan amount, the total loan due at the time of the default has to be over 5 million. Right? It says if the balance amount of the original amount of the loan is less than 5 million, the bank, in case of default, sell the property mortgage by the public auction in terms of section 4 of 1990, even if the original amount of the loan was 5 million or above. So in this case, what happened? Even though the granted loan amount is 5 million, but at the time of the default, if it is less than 5 million, then we can't go parate. Basically, in simple manner, if I say this, today, if we are to go parate, granted loan amount has to be definitely over 5 million. And also the total dues, total capital due as of today at the time of default also has to be over 5 million. When you are calculating the capital outstanding, you can't add the interest. Example, if I give an example, we say we have granted a loan 6 million and the customer has paid a certain amount. Today the capital outstanding is 4 million and the interest is 4.4 million. We can't go parate. We can't go parate. right? Then we have to file mortgage bond action. That is number one. There is another, I give another example. We say we have granted the loan facility 6 million. The total, the capital outstanding today is 4.5 million. Interest 500,000, right? When you add this now, the total outstanding is, we say, over 5 million. Still, we can't go parate because the capital outstanding is below 5 million, right? Example number 3, we have granted the loan 7 million. The loan is defaulted. Today, the loan amount is, capital outstanding is 5.1 million, interest 500,000, total outstanding 5.6 million. We can go parate. So that is the law as at today, as for the Sumudu Sanjeevananayakara, Sanjeevani Nanayakara versus HNB. So basically, the law now has been changed, right? So then, what are that is one? This is one restriction on the parate process. You have to remember the restriction imposed by the statutory law, that is amendment number 1 of 2011 and amendment number 19 of 2011, where they imposed a limit of 5 million. And then you have to remember the Sumudu Sanjeevani Nanayakara matter, where the Supreme Court of the country imposed another limitation, that is the total outstanding, including the capital outstanding at the time of the default has to be over 5 million. Now that is the situation. Then there is another limitation imposed by the Court of Law by a judgment, that is Chellayya Ramachandran versus HNB matter. In the Chellayya Ramachandran matter, it was decided as under the provisions of 4 of 1990 parate process, the bank can auction only the first party mortgages. Third party mortgages cannot be auctioned under parate. What is first party mortgage and what is third party mortgages? I will explain this. Third party mortgages mean the borrower and the property owner are not the same person. Borrower, we say borrower is A, right? A borrowing money, A takes a loan from the bank. Another person, namely B, right? He is mortgaging his property as a collateral to the bank to grant a loan to A. So that type of mortgage is called third party mortgage. So in a third party mortgage, there are 3 parties. That is the lender, the bank, the borrower, and the mortgagor. 3 parties involved. First party mortgage means the borrower and the mortgagor are the same. In a first party mortgage, only 2 parties are there. That is the lender, the bank, and the borrower and the mortgagor are the same. So there are 2 parties. So that is the difference between first party mortgage and a third party mortgage. As per the Chellayya Ramachandran judgment, the Supreme Court said the bank cannot go parate under parate for third party mortgages. So it has to be a first party mortgage. So what are the limitations now we have? 1, the loan amount has to be 5 million. Loan amount has to be 5 million. Number 2, it has to be a first party mortgage, not a third party mortgage. So if it is so, then we can go parate. So that is, those are the limitations there. Then you have to remember another case, that is Samathapala Jayawardena versus HNB. In this Samathapala Jayawardena versus HNB case, what happened? This is a family business. They are father, mother, and the son were the directors. father had the majority of the shares, 98% of the shares held by of the company held by the father. He was the managing director, and other two they were just silent directors, partners of the business, and this company obtained a loan facility from the bank, and managing director's property was mortgaged to the bank, and the company defaulted the payment, and the bank went for auction under Parati. So then the argument, then the borrower, rather the mortgagor, that is Mr. Javardhana, he went to courts. Now they are, you see, this it's on the face of this transaction, it looks like a third-party mortgage. Lender is the HNB, the bank. Borrower is the company. The mortgagor is Mr. Javardhana. So you see there are three parties. So it looks like a third party mortgage. So then Mr. Javardhana went to courts and against the bank, and he said, as per Chellaya Ramachandran matter, third party properties cannot be auctioned under Parate. So therefore the resolution passed by the bank is wrong, illegal. So however, then court took a different point, different view, and said, as per this transaction, Mr. Jayawardena is the managing director, main shareholder, and he has been benefited from the loan that the company obtained. So therefore, in a situation like this type of mortgage cannot be considered as a third-party mortgage. So therefore, the bank has right to go parate. So again, remember, Chellaya Ramachandran judgment has not been changed by Samathapala Jayawardena judgment. Chellaya Ramachandran judgment still valid. As at today, it is valid. So bank cannot auction third-party mortgages under Parate. Samathapala Jayawardena and HNB matter is a totally different matter, and there the court interpreted the word third-party mortgages. And Mudina Perra versus DFCC, a recent judgment, also there the court said said the third-party mortgages cannot be auctioned, but it against if you have benefited from the loan, then it cannot be considered as a third-party mortgage. So therefore, can auction. So those are the restrictions that you have to remember. And remember, this law, when we say not only this, law is not it's not a lake, or rather it's not a pool. It's not a swimming pool. You know, if it is a swimming pool, the water is there restricted and it is not flowing. But if there are two cases pending in Supreme Court of the country because of this, the uncertainty of the Parate law. It has been referred to the full bench judge of the Supreme Court, and the Supreme Court, if country opens soon, will decide the law and of the Parate. Then thereafter, it will be the law. So after 1 or 2 years time, this we have to study again. The Parate law will be changed. There is a possibility to change it. So those are the restrictions on the Parate. So if you have any questions from here, the restrictions of Parate, you can ask now.
So this loan amount.
Yes.
So this loan amount and capital outstanding both should be more than 5 million, isn't it, sir? To go Parate?
Yes. Yes. As I told you here, right? Initially there was no restriction. At the main Act 4 of 1990, there was no restriction. Then as per the amendment 2011, number 1 and 19, they put a restriction. They said the loan amount, granted loan amount has to be over 5 million. So then after that, it was changed again by Sumudu Sanjeevani Nanayakara in 2017. Now the law is if the granted loan amount and the total capital outstanding at the time of default, both has to be over 5 million. Right? So then you can go parate. Or otherwise, you can't go parate. You have to file a mortgage bond action. For example, if we have granted a loan 6 million and today the customer defaulted and the total outstanding is 4.5 million, then we can't go parate. It is not subject to parate. We have to go for mortgage bond action. However, we say another example, we granted a loan 6 million and default today, the capital outstanding is 5.2 million, that is over 5 million. So then the granted loan amount is over 5 million, total capital outstanding today is also over 5 million, then we can go parate. So that is the law today. So you have to mention both the amendment and also this judgment, Sumudu Sanjeevani Nanayakar versus HNB. This is an exam question. If you see the 2019 paper, entire this thing is covered. So you have to study. And also I want to tell you this. This law, whatever what we studied, this is the law as of today. It could be changed, right? At the time you sit for the exam, this could be changed. It can be changed. So therefore, you have to update. You have to be vigilant, and you have to be update. I hope that will not change very soon because the courts are not functioning. So always remember this is subject to change. Right. Any other questions?
So, this is question.
Yes.
Assume a married couple have come and obtain a loan against a property mortgage.
Yes.
After some time, if they legally divorce, still we can, and the property is under husband's name.
Yes.
After some time, if they legally divorce, can we still go for parate action?
Yeah, right. Okay, good question. Again, principally, the question you said the husband and wife obtain a loan and the property is owned by husband.
Yes.
Right. So first of all, can we go parate if they are not divorced? Can you answer? Husband and wife obtain the loan.
Yes, if the loan.
If the loan?
If the loan amount is more than 5 million, so we can go for parate.
Right. If it is a joint loan, if husband and wife both obtain the loan, borrowers, and if the property is owned by both of them or either of them, then we can go parate. Right? That's number one. We say the property is owned by husband and the loan is obtained by wife, then we can't go parate because it's a third party mortgage. Irrespective whether they are married or not, it's a third party mortgage. Right? So then what happens if they divorce? Right? Still the loan is under them jointly. Right? So we basically or legally we can go parate, but what will happen if we try to go parate? They will go to courts and get a enjoining order because in a situation like that, it is easily they can go to courts and go get an enjoining order. However, since the borrowers are joint borrowers, the property is okay owned by one of the borrower, we still can go parate. That is not a question, but it can be challenged. Right. Any other question?
Excuse me, sir.
Yes.
According to the Samatapala Jayawardena versus HNB case, the
Yeah.
company director property is subjected to the Pahate procedure, right?
No, I didn't say that. Right? Again, remember the facts that I discussed with you. Right? Company director and the company are not the same. Right? If a company borrow the money, director mortgage the property, then it is a third party mortgage. So fact is in the facts of the Samatapala Jayawardena was different. There, the director, managing director holds 98% of the shares of the company. Other two directors, the family members, and they were just silent directors. They were not involved in the business. So therefore, court said, considering these facts, after considering this fact, this so-called third-party mortgage is actually not a third-party mortgage. It is like a first-party mortgage because the managing director and the business are the same. So Mr. Javardhana has benefited from the loan that obtained by the company. It's like this. So if I want, I say example, say now under the Companies Act today, we can have single director company. So I form a company. I'm the sole director, and my company obtain a loan, and my personal property I mortgage to the bank. So in a situation like that, when you consider the facts of the case, it seems to be that I have put a company in front as a borrower and has obtained the loan, and I has utilized the loan. I have utilized the loan. So I have been benefited from the loan. So in a situation like that, we can go parate. We say there's a company, we have two directors, right? Myself and another friend. We both have 50-50 shares of the company. Company borrow a loan, and I mortgage my property. Company default. If it is so, then in a situation like that, definitely that is a third party mortgage because the company is a legal entity, it's a legal person, and I am the mortgagor, borrower is the company. So I have only 50% of the shares. So therefore, I have no control of the the company, and also I have not benefited from the loan. It has been used to the company work or the capital. So therefore, my property cannot be auctioned under parate. So bank has to go for a mortgage action. So it is as per the Samatapala Jayawardena matter. Don't say that though the bank can auction the company director's property. It is not the case. The case law is very clear. Chellaiya Ramchandra judgment is valid even today. So that means a third party property mortgages cannot be auctioned. The director's property that means it is a third party mortgage. Samatapala Jayawardena judgment we can apply only in limited situations where the director holds the majority shares of the company, and we have to prove that he has got the benefit of the loan that we provided. In a situation like that only, that we can auction a property of a director which kept as a security. Clear?
Yes, sir. Thank you.
Right. Okay. So then we'll finish with this because the time is now 2:40. So we have to go for the other one. This is again, I'm saying this is very important. So therefore, study the act provisions, amendment, and also the cases that I gave. Right. Then we'll go to the other one. Right. This is the second topic that I want to discuss with you, the dormant account nomination and last will. So some important laws for the bankers. These things that you have to remember, these laws or these procedures, you have to be very familiar with when you are doing your banking businesses. What are those? Number one, the dormant account. What is a dormant account and what purpose that we classify the dormant accounts in that we put that into that category. What is the reason and what is the law behind that? That is number one. Then we have to discuss about the abandoned properties, then nomination, last will, then release of interstate properties, testamentary procedure, and recovery of dues of a deceased customers. You see, these are some practical problems that we day to day face when we are doing our banking businesses. Right. We'll see what is a dormant account. Dormant account means an account without any transaction for a long period of time. Right? Again, an account without any transaction for a long period of time. Right? The long period, when we say the long period of time without any transaction, this long period of time has not been defined in any place. So therefore, remember this. The bank to bank, this can be changed. So it's an internal procedure. So how long you consider to convert an account or classify an account as a dormant account. It could be changed from bank to bank. Some banks they consider an account as a dormant account if there are no transactions for 6 months. Some banks 1 year, some banks 3 years. Likewise, there can be differences among the banks, right? So, if there are no accounts there are no transaction of an account for a long period of time, then the bank classify this type of account as dormant accounts. So, that is the procedure. You have to monitor the accounts. If you see there are no transaction for a long period of time, then you have an internal procedure. As per your procedure, if this account has no transaction for a period of time that's specified in your internal process, then you have to classify that account as a dormant account. The time period to classify the account as a dormant account is vary from the bank to bank. So it can be changed from the bank to bank. You have to check your internal process or the procedures, and then you have to classify the account as per the internal procedure or process. Then the bank separate this account from the active account for monitoring purpose. This is very important. Why do we have to do this? Why do we have to categorize this account as dormant account? Right? What is the purpose? Purpose is for monitoring purpose. This is why. So remember, we have a duty as a banker. We are governed by the rules, the banking laws, and also rules and regulations issued by the central bank. And also we have to follow certain acts and enactments also. One of those are Anti-Money Laundering Act. So which will be discussed with you by Mr. Ranga later. So remember, as under the Anti-Money Laundering Act, the provisions of the Money Laundering Act, the banks, they have a duty to prevent the customers by laundering money. So the customers should not allow to clean the money, dirty money, through the process of banking. So we should not allow. So therefore, we have a duty to prevent that. That's why we categorize these accounts without any period, without any transaction for a long period as a dormant account. You know, where bankers knows that when you put an account into a dormant status, the account cannot be operated by the customer unless the bank lifts the dormant status or change the dormant status. So the dormant accounts customers can use for the money laundering activities. So basically what happened, a customer, they open an account, just open an account without doing any transaction, just keep that account for a long period of time. Some occasions, all of suddenly a foreign remittance, a huge amount comes to account. So since there are no transactions for a long period of time, that we and that customer also not familiar to us and we are not dealing with him, so this account will not monitor by the bank because there is no transaction. We normally monitor the transactions, not the account. So therefore, since there are no transaction in the account, this account can miss to us. So therefore, it is to prevent the money laundering activities and other illegal activities that we monitor them and we categorize them as dormant account. Then thereafter, when we put or when we categorize the accounts into the dormant account, we have a special duty to monitor the dormant accounts. So if any transaction happen to the dormant account, you know that you have to be vigilant and you have to see the sources of funds, and if the transaction is suspicious, that you have to report to the central bank under the suspicious transaction act. So that is why we change the accounts to the dormant account status. So then that is about the dormant accounts. Then abandoned properties. This is mentioned in the section 72 of the Banking Act. Abandoned properties. What is abandoned property, right? Or from the expiry of the time shall presume as an abandoned property, right? If we say that there's a money, there's a deposit in the bank, and the customer has unattended to the bank for a period of 10 years. So then the bank can consider that as or categorize that money as an abandoned property, abandoned property, right? Abandoned property for 10 years, no transaction, no contact for 10 years. Dormant accounts different, no transaction for a shorter period. Here 10 years, right? That's the difference. The deposits and other monies held in the bank without any transaction over a period of 10 years. If there is an account or deposit with the bank, no transaction for 10 years. If it is a safety deposit boxes with the bank where the owner has failed to respond within 3 years to the notice issued by the bank. So two different scenarios. If it is a deposit or other money held with the bank and no transaction for over 10 years, then we have to categorize that as abandoned property as per section 72 of the Banking Act. If there is a safety deposit or safety boxes, we provide that service to the customers, and if there are no transaction for a long period of time, then we send a notice to the customer. Notice to the customer, unattended for a long period. Then we send a notice. After sending the notice, if customer doesn't turn within 3 years of the notice, then that property or the safety locker can be considered as an abandoned property. Abandoned property. So What is the procedure with regard to the abandoned property? If it is abandoned property, can we keep that property? Can we utilize that money? Right? Abandoned means that he has no interest. So then what is the process? Can we take that money? Can we give that money to our employees? So what is the process? What is the procedure? So that is mentioned there. So this is the procedure with regard to the abandoned properties. Section 73 of the Banking Act says the bank shall make a report to the monetary board. So bank has an obligation to prepare a report on their abandoned properties and to prepare a report and send that report to the monetary board of the central bank. That is number one. Then after sending the notice to the or the report to the monetary board of the central bank, the monetary board will direct the bank. The bank should then transfer the money to the special account at the central bank. So we send the notice or the report to the central bank monetary board, and we mention these are the accounts and these are the safety lockers that we have, which can be considered as a abandoned property. So then the monetary board gives directions to the bank. So they will ask you to transfer the money in the account to a special account in the central bank. Right? Articles shall be reported to the monetary board also. Articles means that gold articles and the safety lockers and everything that also that we have to report to the monetary board, and also it has to be reported to the minister in charge of banks. We have to report as per section 73 of the Banking Act. Then after 30 days from the report to the report, the bank has to publish a notice in the newspapers. So we send a notice to the central bank, and we again has to put a publish. We have to publish a newspaper notice also. So that means that we give a notice to the general public. Say we are saying that these are the abandoned properties of our bank. So if you have any interest that you may claim your ownership. So that is the notice that we have to publish. Then send the notice to the last known address of the customers. That is the other one. We have to publish notice in the newspapers, and also we should give notice. We should send notice to the last known address of the customer. That is number 5. Then if the owner or the title holder can then claim the money from the monetary board by providing the proof of his ownership. So once we send the notice to the customers, and when we publish the paper articles, if customer sees this article or notice rather, so the customer then can claim that money from the central bank, because the money now already transferred to the central bank. So then the central bank will release after considering the ownership of the money, that the central bank will release the money. So otherwise, what will happen if no one claims the money? That will be the property of the government. So banks cannot keep that money. It will be absorbed to the government property. So that is about the abandoned properties. Then number 3 that we have to learn is okay. We were discussing about the abandoned properties and procedure, and now the nomination. Nomination. Remember, the law related to nomination is in the Civil Procedure Code. You may note down this. This is not in the Banking Act, not in the Bills of Exchange Ordinance. This is in the Civil Procedure Code. Civil Procedure Code section 544. That is the law applicable for the nominations. Right? As per section 544 of the Civil Procedure Code, any person over 16 years of age may nominate a person to receive the money on or benefit of the movable property upon the death. So that is called nomination. So nomination means, if I explain in simple language, a person can nominate another person, nominate a nominee to receive the money and the goods in a bank or in other uh, company or where after the death of that account holder. So basically, if I have an account in the bank, I can nominate somebody, not necessary to be a legal heir or family member. I can nominate anybody to receive the money in that account after my death to that nominee. So that is called nomination. That law is mentioned in section 544 of the Civil Procedure Code. Right? So then, for what purposes that we can make a nomination? For the following that we can make nomination. Nominee, number one, money in the account other than the current account. So the nomination can be made to any account other than a current account. So current accounts, remember that you can't have nominations. Savings account, fixed deposit, whatever the accounts, NRFC, RFC, or whatever, cash build up, investment plans, or whatever, all these accounts that you can have a nomination, but not current accounts. And also remember, 16 years of age, not 18. Any person over 16 years of age can made a nomination. Number two, any shares in a registered company. So if I have shares in a registered company, I can give nomination to the company for the shares. So that means after my death, the shares will be given to the nominee. Any money deposited in a registered finance company. So for example, if I say that I have fixed deposit in a finance company, we say the finance company, I have fixed deposit in the finance. So I can give nomination to the finance, nominating somebody after my death. The deposit will, the money in the deposit will be given to that nominee. Then the fourth, for any life insurance. Say I have a life insurance, so I can make a nomination. So after my death, the money due on the life insurance will be given to the nominee. That is number four. Number five, any movable property deposit in the vault of the bank. So for the vaults or the safety lockers, the customers can give nomination. They can give nomination. So after the death of the customer, the money or the property in the safety lockers will be given to the nominees, the person who nominated. So this is called nomination. Then how to make a nomination? No, how to appoint a nominee? The nomination can be done at the time of the opening the account or later. So at the time of opening the account, we can make a nomination, or we can account holder can give a nomination a later stage after opening the account also. That is possible. And the second important point that we have to remember is nomination has to be done in writing. So basically, banks, they have a format for this. We use a format. We give the customer the nomination form. The customer fill the nomination form and sign and give. So that is a nomination in writing.
Sir,
Yes.
excuse me. What
Yes.
is the age limit for the nominee?
Okay. There is no age limit for the nominee. Right? It could be even a minor. Right? So basically, if I want to nominate my son or daughter who is a minor, I can nominate. So they can get the money. But only thing, they can't withdraw the money unless they attain age of 18. Clear?
Yes, sir. Thank you.
Right. Okay. So then the The nomination can be revoked. We were talking about the nomination in writing. So nomination has to be given in writing. We have a format for that. The customer can fill the format and give the nomination. Or even customer can give a written request to the bank in writing to nominate somebody for those accounts and vaults. And nomination can be revoked by the account holder later. So I can give a nomination today and tomorrow I can revoke the nomination, and also day after tomorrow I can put another nomination. So basically it has to be in writing. So revocation also has to be in writing. Revocation, and we can revoke and reappoint another nominee. Likewise, it can be do in a number of time. Anyway, nomination and revocation both has to be in writing. So that is about the appointment of nominees. Then what is the effect of the nomination? What is the effect? What happens if we give a nomination? This is very important. Nominee is entitled to get the money deposited or benefit of the shares or the insurance. This is very important. If customer has given a nomination, we have to give the money to the nominee, not to anybody else. We don't want to check anything, whether he has a relationship, whether he is a legal, the nominee, whether he is a legal wife or illegal wife or whatever, right? Whether he is a legal, that person is a legal heir, what is the relation, nothing. We don't want to check anything. We have to give that money to the nominee. The nominee has to prove his identity to the bank. That is all. When a customer is deceased, nominee has to prove only one thing. He has to prove his identity. If we are satisfied with the identity of the nominee, that we have to release that money to the nominee, nobody else. The bank or the company has to pay the nominee and not to the legal heirs of the deceased customer. So this is very important, right? We basically we face this situation when a customer is deceased, customer dead, legal heirs come and demand money, right? Legal heirs means wife and children, or if he is not married, parents. If the parents are dead, brothers and sisters, they can claim. So they are the legal heirs. So then, what is the situation? If there is no nomination, of course, then the legal heirs are entitled. If there is a nomination, legal heirs cannot claim because their right will be superseded by the nomination. Only the nominee can claim the money in a situation like that. Then the next one, if there is a nomination and also if there is a last will, what is the situation? We say the customer has given a last will. As per the last will, the money in the account has been given to the son. And in the account, there is a nomination. The nominee is the daughter. Who will get the money? So nomination override the last will. So therefore, the money will be given to the nominee. So that you have to remember. Basically, it is very easy to remember like this. If there is a nomination, irrespective of what the customer has done, the money will go to the nominee. Nomination will supersede everything, right? Nomination will supersede everything. The nominee will get the money. That you have to remember, register in your mind. Whether there is a last will, whether there is a testamentary action or whatever, nothing. Nomination will supersede everything. So nominee has to prove only one thing, that is his identity only. So if we prove that money that we have to release to the nominee, not to anybody else. Right. If you have any questions from nomination, you can ask.
Excuse me, sir.
Yes.
Is there any restriction for the maximum amount we can put for the nomination, or the amount is
no, there's no restriction. When we are giving nomination, we give the nomination to the account. Whatever the amount in the account, that will go to the nominee. There's no restriction. and there's
Thank you,
no
sir.
there's no minimum amount also, right? We give a nomination to the account.
Thank you, sir.
Okay. Any other questions?
So this current accounts, why don't we give any nomination for current accounts?
I didn't follow. Can you ask the question again?
So for current accounts, why don't we give?
Yeah, actually, that is a question that, of course, I'm also not very clear. But as per the section 544, it says for the current accounts we can't give nominations. But the reason that I can think is if you give a nomination to the current account, if it is overdrawn or if you have issued checks from the current accounts, that liability also then pass to the nominee. So that may be the reason that then the nominee will not get any benefit. He will get the liability. So the nomination, the concept of the nomination is the benefit should go to the nominee, not the liability. So that may be the reason that the law has, I mean, the legislature has not allowed to provide nomination to the current accounts. That may be the reason. But it is not clear. There are no decided cases on that matter also. However, the statutory law is for the current accounts, we can't have nominations. So what about the joint accounts? No one asked that question. What about the joint account? What happen if customer joint account, when there is a joint account, one party deceased, what happened? So
Other party can get the money. Other party can get the money.
Yes, very good. So as per the joint accounts law, there is a concept called surviving party rule. So that means if it is a joint account, the surviving party will get the entire money. So he or she, the other party will get the entire money. So that is about the joint accounts. Any other questions from here? Okay. Yes.
So per time, how many nominees we can put per account?
There's no limitation there also, right? It says that you can appoint a person, but of course you can have 2 persons or 3 persons also. There's not restriction. But if it is so, for example, we say there are we have nominated 2 persons, then what will happen? That will equally divided among the nominees, 50-50. There's no restriction, but I don't know whether the different banks, they have different policies, internal policies. But as per the law, as per section 544, there's no restriction like that. It says strictly, if you interpret, it says a person. That means one person, but there's no clear restriction on the number of nominees. So any other questions?
So excuse me, can we nominate a foreigner?
Again, there's no restriction in the section 544. It's not. It doesn't say that we have to nominate a citizen. So therefore, a foreigner also possible. But you know that when we appoint a nominee, when we appoint a foreigner as a nominee, if he takes money, that is subject to foreign exchange rules and regulations. So subject to that, even we can nominate a foreigner. There's no restriction as per the section. And again, I'm telling that there's no decided cases on that matter also. Any other questions? So we'll go to the next one because it's now 3:10. So we'll go to the last will, because otherwise there's no time that we can finish this. Last will is another important thing that you have to remember. A person can write a last will during his lifetime. So here he can make a last will in writing. It can be prepared before a lawyer or notary, before two witnesses, or he can write a last will in front of 5 witnesses. So last will is a document that a person can give or mention his desire, his intention, how should his property should be divided after the death of that person. So therefore, it is very important document. So last will can be prepared for any properties. Any properties means movable, immovable, tangible, intangible, any property that you can include it into the property, land, money, business name, everything that you can put into a last will. In a last will, you can give the properties to more than one person. So you can basically nominate more than one person in a last will. It is not necessary to be the legal heirs. You can give your properties to anybody or any institution or even to a temple or whatever organization by a last will. So that you may have to remember. Then how does the last will enforce? When a customer or the person who prepared the last will, after the death of the person only the last will comes to enforce. So the part in the last will that we have to nominate a person called the administrator or the administrator. Then the administrator has to file an action in the court of law. That is called a testamentary action. So he has to file a testamentary action. He has to prove the last will in court of law. Then after proving the last will in the court of law, then the properties of the deceased person will be divided or will be given to the nominees in the last will. So that is the procedure. Then how a last will can be cancelled? You know, the last will can be cancelled by destroying the last will. So you know the last will is last will after you writing a last will, you keep the last will. It's a confidential document with a person. With a reliable person actually. Normally these last will are kept with the lawyers, or sometimes you can keep that last will with a reliable person, a friend or relative, and that person has to produce the last will after the death of the person and has to enforce in court of law. So the last will can be cancelled by destroying the last will. You can burn it. You can just destroy the last will. That if you destroy the last will, that is the end of the last will. That is then thereafter no last will, right? Then last will, after writing a last will during the lifetime, that person can cancel the last will and he can write another last will, fresh last will. A person can write more than one last will. So what will happen if a person has written more than one last will? The last will, that means the very last will wrote by this person will be the valid last will. So once you write a last will, all the previous last will be cancelled. That is one way to cancel the last will. If a last will is written by an unmarried person, if he marry, then the last will be cancelled automatically. It become cancelled. So that is another way that a last will can be cancelled. So that is about the last wills. And remember, if customer has written a last will, the legal heirs of the deceased person, if customer deceased, if legal heirs brings the last will, and asks you to give the properties or the money in the account as per the last will, remember that you are not supposed to do that and you have no authority to do that. Remember, the customer's legal heirs, they have to go to courts and they have to bring a court order. They have to file a testamentary action and bring a court order. Then the bank's duty is to credit that money to the account mentioned by the court order. So then the court will distribute the property and not the bank. Bank has no right to distribute the property or the money as per the last will. That you have to remember. If there is a last will, customers' legal heirs, it is must, they have to file a testamentary action and bring a court order. That is about the last wills. Then if there is no last will, what is the procedure? If there is no last will, if the money in the account is less than 4 million, if it is less than 4 million, what do you do? So if it is more than 4 million, then it is very clear. It is subject to testamentary. The legal heirs of the deceased customer, they have to file action, a testamentary action in the court of law. Then they have to bring a court order. Then the bank will credit the money as per the court order. Then the court will distribute the money among the legal heirs. If the money in the account is over 4 million. Then if the money in the account is less than 4 million, that means it is not subject to testamentary procedure. Then what is the situation? As we know, then the money, if there is no nomination, if there is no last will, if the money in the account is less than 4 million, then the bank can and bank should give that money to the legal heirs. So how do we give the money? So it's basically, if there is no last will and if there is no nomination, the money in the account will be divided in this manner. That is, half of the money will go to the wife. The rest half will be equally divided among the legitimate children of the deceased person. For example, we say the customer has 3 million in his account and customer deceased. There's no last will, no nomination. Customer's wife come and demand the money or claim the money. So then how can we give all the money to the wife? No. Only half of the money can be given to the wife. That is 1.5 million. Rest 1.5 million will be given to the children. We say this person, he has 3 children. So this 1.5 million will be equally divided among these 3 children. So each child will get 500,000. So that's how we have to give that money. So then what are the things or what are the documents that we have to check before we divide that money? Definitely that we have to get the death certificate. Death certificate, you have to see the original and you have to get a photocopy of the original and you have to write on the certificate, death certificate, original scene, sign and keep in your file. That is number 1. Number 2, you have to get the marriage certificate. You have to see the original marriage certificate and get a photocopy of the marriage certificate. Why we get the marriage certificate? You have to see the person who claimed the money, the person who says that she is the wife, that you have to satisfy that she is the actual wife. So then you have to check the identity of that lady and you have to be satisfied that she is the widow or the wife of the deceased person. Then if there are children involved, then you have to get their birth certificate also. You have to get the birth certificate and you have to see whether the deceased person is the father of the deceased of the children, that you have to be satisfied. Then apart from that, you have to get an affidavit from the wife, and if children are over 18, that we have to get an affidavit from the children also. So then that get an affidavit. Also, we have to get an indemnity, indemnifying the bank from any damage or any claim that legal heirs have to give an indemnity to the bank. So these are the documents that we have to get. So after obtaining these documents, half of the money will go to the wife. We have to give to the wife. The rest of the money will be divided among the children equally. So that's how we have to divide that money. If yes.
What about that dead person has parents?
Okay, right. If he's a married person, parents won't get anything, right? If he's a married person, if he has a valid marriage, then the legal heirs are wife and children. If this person is unmarried or divorced, then what will happen? The half of the if we say he's not married, he's never married, right? He has no children. Then the money will go to the parents. Money will go to the parents. So and if parents are not there, the money will be given to the siblings, that is brothers and sisters. If the marriage is there at the time of the death, valid marriage is there, then parents and siblings, the brothers and sisters will not get anything. Clear? So there also you have to check these documents, this certificate, then there's no marriage certificate, then you have to get birth certificate of the parents and also siblings and affidavit and the indemnity, then you release the money to the parents or siblings. So that is about
Excuse me, sir.
yes.
So when it comes to if the person doesn't have any children, if the wife is only there, how do we share that, sir?
So if children are not there, then what will happen? The entire will go to the wife, right? If wife is also not there, if then the money will go to the other side, that is parents and siblings, right? So that's how it will be divided.
Thank you, sir.
Right. So then we'll go to the next one, the testamentary procedure. So I don't have time to explain because now it's 3:25. Just I have given the main steps of a testamentary action. I think you can read and understand this, but anyway, this procedure is not much necessary for your exam, but it's good for your knowledge. And then this one is a little bit important, so therefore I will just run through this. Recovery of dues of a deceased customer. So how we can recover the money from a deceased customer, right? Can we recover the money from the customer's account after the death? So basically, we cannot. Remember, we can't deduct any money from the customer's account after the death of the person. So what we have to do? Immediately, we have to freeze the account. Freezing the account means no debit, no credit, both we have to freeze. Then what we have to do is, if customers legal heirs, if they have filed a testamentary action, what we have to do, we have to lodge a complaint in the testamentary action. And then from the testamentary action, the court will settle our dues and the rest will be divided among the legal heirs. Then if customers, if customers legal heirs, deceased customers legal heirs, if they don't file a testamentary action, bank has a right to file a testamentary action and claim our money. So if there is no money to pay in the accounts, then what we can do, we can get a we can get a judgment in the testamentary action, and we can sell the assets of the deceased person and recover our dues. This is the way that we have to recover the dues of a deceased customer. So there's a bad practice or wrong practice, I would say. Sometimes when we know the customer is deceased, sometimes some banks, they immediately set off whatever the dues from the deceased customer's account. Remember, that is a wrong practice. If legal heirs get to know this, they can challenge that in court of law, because through the testamentary procedure only that we can recover whatever the dues from the deceased customer. So basically, for example, we say the deceased customer's current accounts is overdrawn, there's a overdue balance, and the other side, he has a savings account. So then if customer is deceased, you can't set off customer's savings account against the fixed or rather the OD unless you get permission from court of law. So that is about recovery of dues from a deceased customer. So with that, I'll finish my lectures. This is my final lecture with you. So then next week onwards, Mr. Ranga will take over. And after that, if there's a revision class, that we will meet again. Thank you very much. If you have any questions and if you have time, you can ask now.
Yes, sir. Without the involvement of notary, the person can write a last will, right?
Correct. Yes. As I told you, in front of 5 witnesses.
Okay, sir. Thank you.
That is valid. That is a valid last will. Okay. Any other questions?
So what is the purpose of indemnity?
What is the purpose of indemnity?
Yeah.
Right. Okay. Indemnity. We take a indemnity. For example, now we say the customer deceased. Someone comes and say, I am the legal wife of the deceased person, and these are the children. Right. So we have to rely on the documents and the information provided by a third party. So what happens if actually this person is not the legal wife, right? Or if that person is divorced and this lady is not divulged that to us, then what will happen? So then we release this money to this lady based on the documents and the information provided by this third party, so-called wife. So therefore, if it is a wrong payment or wrong release of money, the actual person, the actual wife and the children can come later on, can come and claim the money. So in a situation like that, we should get unless we have get a indemnity from the person who received the money, we are in trouble. So we are liable to the actual legal heirs. That is why we obtain an indemnity. So indemnify the bank from any losses or damages. Clear?
Excuse me, sir.
Yes.
One more question. In case of recovery of dues of a deceased customer,
Yes.
irrespective of the property is mortgage to the bank or not, the bank can sell the property and claim for the dues, is it?
Can you repeat the question again? In case of
recovery of dues of a deceased customer,
yes,
that particular customer's property is irrespective that mortgage to the bank or not, the bank can sell his property and claim the dues, is it?
Now the part of that question is correct, part is wrong. Now bank cannot sell the property, court can sell the property, right? So what happened when a customer is deceased, either the legal heirs or the bank has to file a testamentary action. In the testamentary action, we have to file a document called inventory. Inventory means his liabilities and assets. So then after filing this thing, our loans shown as a liability of the deceased person and his assets will be shown in another column. So what will happen? The court will sell the properties, whether it's mortgage to the bank or not, irrespective of that, court will sell the properties of the deceased person and will pay the creditors, including the bank. So it is not the bank who sell the property; it is the courts sell the property and settle all the dues to the creditors.
Okay, so thank you.
Right. Any other questions?
So there's one
One more
question, sir.
question.
Yes.
What is the difference between the when there's a mortgage over a vehicle and when there's an absolute ownership over the vehicle? What is the difference between the method of recovery?
Okay. When you say the absolute ownership, that means it's a lease, right? It is governed by Finance Lease Act. So there's a different procedure. Under that, you can take the possession and you can resell the property, and for the balance, you can file action. That is one. The other one you said a mortgage of a property, mortgage of a vehicle. That is under the Mortgage Act. Under the Mortgage Act, there is a different procedure. You have to file mortgage bond action and you have to get a court order. Through the courts only you can sell the property and you can recover the mortgage. That's two different procedures, two different laws apply in these two occasions. The first one is governed by the Leasing Act. The second one is governed by the Mortgage Act. That is a difference. Clear?
Okay, sir. Does the leasing act allows to dispose of vehicle which is owned by a deceased person?
No, there is a provision for that. You absolute ownership with us, so therefore we can get the ownership of the property, and we have to transfer the property into the name of the bank. There is a provision in the Motor Traffic Act 12(4). Under that, we have to make a request to the motor register department. Then the property will be transferred to the bank. Then we can sell it. Right? Anyway, under the Leasing Act, the property is owned to the bank, not to the customer. It is not the property of the deceased person. It is the property of the bank. So whether the customer is deceased, it is not necessary. It is not material. We can take the possession and we can sell the property. Even after settling all the dues of under the lease, still the property belongs to the bank. Property belongs to the bank. So therefore, we can sell the property to anybody else. But the practice is, if customer pay all the installment under the lease, our practice is we give the property to the customer. That is a practice only. That is not the law.
Okay, thank you, sir.
Right. So I think time is now 3:30. So 3:35 actually. So we'll finish the lesson today. Thank you very much for the support that you extended all this time. And please study the notes and also do past papers. We will meet again after Mr. Ranga's lessons are over by a revision class. Thank you very much.